In 2008, the United States economy collapsed. Not slowly, not quietly. It collapsed in a matter of weeks, taking with it 8 million jobs, trillions in household wealth, and the life savings of ordinary Americans who had done nothing wrong except trust the system. It was the worst financial catastrophe since the Great Depression. And at the center of it, not the only cause, but the spark that lit the fire, was a mortgage company from California called Countrywide Financial and a man named Angelo Mozilo. This is the story of how one company's greed rewired the entire American financial system and what happened when it finally broke. Angelo Mozilo was born in the Bronx in 1938, the son of a butcher. He was not born into money. He was not educated at Harvard or Yale. He worked his way up through the mortgage industry the old-fashioned way, starting as a messenger boy at a mortgage firm at 14 years old, learning the business from the ground up. By 1969, he had co-founded his own company. He called it Countrywide Credit. His pitch was simple: make home ownership available to everyone, not just the wealthy, not just the well-connected, everyone. For decades that pitch worked. Countrywide grew steadily through the 70s, 80s and 90s, becoming one of the largest mortgage lenders in the United States. Mozilo became rich. He became powerful. He became the face of the American dream, a Bronx kid who built an empire. But somewhere along the way, the dream curdled. By the early 2000s, the American housing market was heating up. Interest rates were low, demand for homes was high, and Wall Street had discovered something extraordinary. Mortgage loans could be bundled together, sliced into pieces, and sold to investors around the world as securities. These were called mortgage-backed securities. The more mortgages that were issued, the more securities could be sold. The more securities sold, the more money everyone made. Banks, brokers, ratings agencies, investors, everyone had an incentive to keep the machine running. Countrywide was at the center of that machine, and Angelo Mozilo knew exactly how to feed it. Starting in the early 2000s, Countrywide began aggressively pushing a new kind of mortgage product: adjustable rate mortgages, interest-only loans, no documentation loans, where borrowers did not even have to prove their income. These became known as subprime mortgages, issued to borrowers who, under any traditional standard of lending, could not afford to repay them. Countrywide issued them by the millions. The logic was perverse but simple. It did not matter if the borrower could repay the loan. By the time the loan went bad, Countrywide had already sold it to Wall Street. Wall Street had already bundled it into a security. That security had already been sold to a pension fund in Norway or a school district in Ohio. The risk had been passed down the chain until it disappeared, or so everyone told themselves. Mozilo knew the loans were bad. We know this because he said so in his own emails. In 2006, describing one of Countrywide's most popular subprime products, Mozilo wrote internally that it was the most dangerous product in existence. In another email, he called the loans toxic. He described a portfolio of mortgages as a ticking time bomb. He wrote these things in private, while publicly telling investors, regulators and borrowers that Countrywide's products were sound. By 2006, Countrywide was issuing 1 in 5 mortgages in the entire United States. 20% of all home loans in America were flowing through this one company. Its revenues were in the billions. Its stock was soaring. Angelo Mozilo was worth hundreds of millions of dollars. And he was quietly selling his own shares, offloading $470 million worth of Countrywide stock between 2004 and 2007. even as he assured the public the company was in excellent shape. Then the housing market turned. In 2006 and 2007, home prices began to fall. Borrowers with adjustable rate mortgages saw their monthly payments spike. Millions of Americans who had been sold loans they could not afford began to default. At first it was a trickle, then it was a flood. Countrywide's loan portfolio, stuffed with the toxic products Mozilo had privately warned about, began to collapse from the inside. In August 2007, Countrywide drew down its entire $11 billion credit line in a single day, a sign of catastrophic desperation. The stock cratered. Customers lined up outside branches to withdraw their money. It was a bank run in slow motion. By January 2008, Countrywide was effectively finished. Bank of America acquired it in a fire sale for $4 billion, a fraction of what it had been worth 2 years earlier. But the damage did not stay contained to Countrywide. The mortgage-backed securities that Countrywide's loans had been bundled into were sitting on the balance sheets of banks, investment firms, and financial institutions all over the world. As the loans went bad, the securities went bad. As the securities went bad, the institutions holding them started to fail. Bear Stearns collapsed in March 2008. Lehman Brothers collapsed in September. The entire global financial system teetered on the edge of complete breakdown. The United States government spent $700 billion on a bailout to prevent total collapse. The Federal Reserve cut interest rates to near zero. 8 million Americans lost their jobs. Nearly 4 million families lost their homes to foreclosure. Household wealth in the United States fell by $13 trillion. The effects rippled across the globe, into Europe, into Asia, into economies that had never issued a single subprime mortgage, but were now drowning in the consequences of America's. And Angelo Mozilo. In 2010, the Securities and Exchange Commission charged him with securities fraud and insider trading. He settled the case without admitting wrongdoing, paying $67.5 million in penalties, a fraction of the $470 million he had made selling his shares. He faced no criminal charges. He served no prison time. He retired to his estate and largely disappeared from public view. The man who had privately called his own products toxic while selling them to millions of American families walked away. The families did not. The story of Countrywide Financial is not just a story about one greedy man. It is a story about a system that rewarded greed at every level. Brokers who earned fees for issuing bad loans, banks who earned fees for bundling them, ratings agencies who earned fees for blessing them, and executives who earned bonuses for looking the other way. Everyone was incentivized to keep the machine running. Nobody was incentivized to ask whether it should. When it finally stopped, the bill was paid not by the people who built the machine, it was paid by the people who trusted it.